Today we're talking oil, down over 8% in the last 2 days. What's going on and what does it mean for investors? I'm talking oil with Bart Melek, who's head of commodities strategy at TD Securities. Well, what is going on, Bart? Why all the downdraft?
Well, it has a lot to do with our certainty. We're not quite sure what is going on in Europe exactly, whether Greece is in or out of the Eurozone, if there will be knock-on effects to the rest of the continent. At the same time, the Chinese authorities are finding it difficult to stabilize their equity market. And as such, that has created a lot of risk-off sentiment. We're worried that China may not have as strong as an economy as previously believed, and that we will see significant surpluses of crude. If that wasn't enough, we're also responding to oversupply concern. There's the P5+1 negotiations with Iran over their nuclear program. OPEC continues to produce some 2 million barrels more than their quota, and U.S. production is not dropping as quickly as many had expected. So a combination of demand and supply factors has basically driven investors away from oil.
So do you see this continuing? Is it just a bad confluence of everything happening all at once, or what's the longer term story?
We think the longer term story is a bit more positive than what we're seeing today. We do ultimately think that China will do whatever is necessary to stabilize its equity market and propel the economy on a growth trajectory. At the same time, we're still thinking that the European situation will stabilize as well, and that implies that demand in the second half should be better than I think the market is currently expecting. And that means ultimately higher prices. We're looking for $60 WTI for balance of the year on average, give or take.
Okay, and I guess where do you see the Greek story? Is that kind of the main story right now?
That certainly was the trigger.
Yeah.
This unfortunately happened at the same time as China was trying to prop up its equity market. The equity market is important in China because if it's allowed to, correct overly sharply, there may be a lack of confidence, and then the Chinese population may not buy real estate, may not be willing to buy vehicles because of the capital losses that potentially could happen. Unfortunately, just as China was trying to stimulate, the Greek story broke, and they weren't very successful at lifting the equity market, and that spooked the market essentially.
So do you see the downside? Are we kind of near the bottom right now?
I would say yes. We really don't see a lot of fundamental reasons to say it should go lower. But of course, should a European deal not materialize, I think potential uncertainty could move it still lower. So it will very much depend on what policymakers are prepared to do to make the situation more stable. And I would expect the Chinese to do something as well to lift their lot.
And where do we go from here with, say, gasoline prices? Obviously, they're going to be affected. Currency is going to be affected. Anything else?
Well, gasoline prices would tend to go lower along with oil. There doesn't necessarily have to be a one-for-one. We're entering peak driving season, vacation season, particularly in the United States, so demand should be pretty decent, and that will likely prevent a full price being reflected due to the oil rout recently.
What about other commodities?
Well, other commodities haven't done very well either. Base metals have been absolutely savaged over the last few days, pretty much for the same reasons as oil has. Many of them are quite elevated on the inventory side, and now there are doubts that particularly Chinese demand may not materialize to the same extent as previously thought, and that implies fairly large inventories and probably a need for low prices.
Copper?
Copper was particularly hard hit, and there's a bit of a technical story there. A lot of Chinese traders were taking long equity, short copper positions. Once the covering of the copper short stopped, people basically sold.
All right, so sort of short term, we got to get through this, and then longer term, a little bit better at least?
We think maybe significantly better, certainly from the levels that we've seen today. We were, somewhat optimistic for the second half, but that was from significantly higher levels. Fundamentally, we don't think very much has changed except the price action. So we see a fairly decent move to the upside for the industrial metals and energy.
All right. Thank you very much, Bart.
Thank you.
I've been joined by Bart Melek, who's head of Commodities Strategy, TD Securities. Thanks for watching. I'm MaryAnn.